Hello, everybody. Welcome to the Fintech Combine. I am your host, Kris Kovacs, and this is the series where we talk with and sometimes about community-based institutions, their digital and business transformation projects, and we meet the innovators, entrepreneurs, and fintechs that make it all possible. On this episode, we're going to preview many of the really interesting fintechs that are going to be presenting at this year's VentureTech Conference in Frisco, Texas. This year, 16 fintechs are presenting at VentureTech. Now, I can't promise they're all going to be in this preview, so we're going to meet many of them here on this pod. We're going all fintech this time. So if you're ready, let's suit up and get out on the field. Josh, thank you very much for joining us today. We are excited to have you presenting at VentureTech this year. Tell us a little bit about Allure Security and what you guys do.
Yeah, thanks, Kris. We're looking forward to being at VentureTech. So Lure Security is a cybersecurity company that's focused on finding and preventing scams that lead to fraud. So those annoying and constant messages that people get telling them their bank account is locked, their package is waiting for delivery, that lead to a website that wants information, our job is to find those scams and to shut them down before people have the opportunity to put their data into those scams, so that the scammers who are targeting banks, credit unions, and other organizations can't get the data they want to make the money that they're going to make using those scams that lead to fraud.
How did you come up with the idea for Allure Security?
I'm sort of a lifetime cybersecurity person, and recently I was running a fairly large business that was helping organizations to prevent account takeover fraud. And what we saw was that when we shut one door to account takeover fraud, another one opened, and that was these scams. And once that door opened and the attackers realized that it was a really effective way of getting their hands on information like usernames and passwords, boy, did they flood towards that entrance. And that created the opportunity for Allure Security to come in and help both the banks, the credit unions, and the other brands that are being victimized here, as well as the general public who's actually are being targeted directly and whose money is being stolen.
Are you guys already working with credit unions, or is this a new vertical for you?
We are. We've been working with banks and credit unions sort of since our inception. So there are hundreds of banks and credit unions whose brands we protect today from scams and fraud, fake mobile apps, social media profiles. The scammers have found a lot of ways to use tactics and techniques to trick people into thinking they're dealing with an organization they trust. And so we're running out there looking at all different nooks and crannies of the internet to find those impersonations and imitations and shut them down.
So at VentureTech, you're going to present to credit unions, you're going to present to VC investors. What do you hope to get out of presenting at VentureTech?
I'd love to learn back from the audience about where their current set of thoughts are around scams and their understanding of scams and fraud. It's really curious to see how different businesses deal with the costs and the impact, how they understand the costs and the impact, and what kind of things they're doing to fight back against the fraudsters. This is a problem that sort of spans many different functional areas. In some businesses, there's a legal team that's out trying to fight these guys in court. In other areas, there's a security team that's out there trying to figure out how to do takedowns and block listing. And often there's a digital team that's somewhere in the middle trying to manage the brand and brand marketing, and really getting caught up in this thing like where someone else is sort of trying to own the brand and the brand marketing, if you will.
How long does it take an institution to be up and running on your platform?
And one of the neat things about us is that we're almost like a really sophisticated search engine. Our software uses AI to hunt around on the internet and find these scams. So turning us on is no different than turning a search engine on. Generally, within the first few minutes of a customer engaging with us, we're able to be fully deployed and finding results. It's not uncommon that 15 minutes after we get on a phone call, we're delivering value.
That's got to be a really heck of a demo, right? When you walk in, you're like, here's the people who are currently trying to rip off your members.
It does make for a powerful conversation, for sure.
It does indeed. Well, Josh, I want to thank you for joining us. We are looking forward to seeing you at VentureTech. It sounds like you got a great product. Can't wait to see you guys take the stage.
Thanks so much, Kris. We're looking forward to meeting you all at VentureTech.
Sounds good. Luis, thank you very much for joining us today. We're super excited to have you on this episode of previewing some of our fintech presenters that are going to be at the VentureTech Conference. Why don't you start by telling us a little bit about yourself and your company?
Great. Yeah. So my name's Luis. I'm the founder and CEO of Ditch. And a way to describe Ditch is we help credit unions service and collect on their debts more efficiently. So we do that by helping their customers manage and repay their debt by providing financial education, by providing a way for them to send roundups of their transactions automatically towards servicing that debt. So if you're a credit union customer and you're struggling to pay off your debt, or you have a credit card or a personal loan that's open and you've maybe missed a payment, one of the ways that we help is we take roundups of that borrower's everyday purchases and then send those automatically towards servicing that debt.
That's awesome. What was your inspiration for creating this service?
Yeah, so my background is in consumer lending. I worked for 3 years as a data scientist for a big consumer lender. And in the process of doing so, I realized that number one, debt sucked. It's really hard to manage. And people don't get enough resources made available to them to do so in an efficient way. And there's a big gap in financial literacy. And most of us don't have the proper resources that we need to manage and repay our debt efficiently. So I started first looking for solutions in the market that I could bring in house to the company that I was working for back then, and I just couldn't find something that I felt was good enough for me to bring there and to give to our customers at the company that I used to work for. And I started doing some research on the solution landscape and realized that nothing really matched what I felt was appropriate. And so I just quit my job and started building it.
What was the inspiration for the name Ditch?
Well, the idea, and this is a funny one because we started out like we conceived it as the idea is ditch your debt, right? Like
Hmm.
you're gonna ditch your debt. But then what we quickly realized, based off of feedback from our members, is that they were some of them were interpreting as they felt like debt put them in a ditch, and then we would help them get out of that ditch that was
Okay.
debt. So it's funny because it's like both sense of the both sort of like interpretations of the word fit
Hmm.
what we want to do, which is ultimately help people manage and repay their debt, and in doing so through our credit union partners.
Were there particular challenges that you had to overcome in building your service?
I think that the technology is it is as complicated as you want to make it, and there are very simple approaches that we could have taken to build and deliver on what we wanted to do. But being that we are technical founders, we wanted to really kind of let the product shine, right? And so initially, because just for context, our initial go to market strategy was we wanted to build, and this is a concept that we're calling like our lab, right?
Hmm.
And our lab is our direct to consumer vertical. So we partner with financial institutions, but we also have a direct to consumer vertical that we use as a lab to test new features that we then bring to our business partners. And so initially, Ditch was purely just the lab. Which meant that we needed to build a product that was compelling enough for
Mm.
people to actually pay for, right? For consumers to actually pay for. So when I think about our like technical complexity, that just kind of set the bar a little bit higher than the ordinary company that sells B2B, right? Because
Mhm.
not only do you need to sell to a decision maker within a credit union or a financial institution, but you also need to get the buy-in from that customer. So that kind of set the bar, and I think that we are all technical. So when I say that this was hard, that is good because it's fun. But the reality is that we did take our technology one step further, and instead of just taking the sort of like simple approach, we really focused on building a product that was not only like safe and secure for our users to use, but also that delivered value beyond just the
Mhm.
basic PFM value. And so there were some technical challenges, especially related to, especially as it pertains to the fact that most of our product, and like kind of our one of our competitive advantages is the fact that Ditch is very personalized, and a lot of that personalization comes from the use of AI. And we were like literally reading the patch notes of the latest updates of the different AI APIs that were coming out and building days after those releases. So we were
Hmm.
really at the forefront of using AI to provide a personalized experience for our for credit union members.
Very cool.
Um, yeah, and so I think that our product is, that's a long way to say that our
Hmm.
product is technically complex,
Hmm.
just because we knew that I had to do that to create a product that was compelling enough
Hmm.
for credit union members to buy into it
Hmm.
individually, which is just more of an advantage when we go and do sell through our business partners.
Yeah, that story of discovery is really cool. Tell me
Yeah.
a little. So this venture tech is going to have fintechs. It's going to have VCs. It's going to have credit unions at it. What's the message you want them to walk away with when you're done presenting?
I think and I hope that the message that comes across is that Ditch will be the next name, the next big name in personal finance. And we are a superior product. We've crafted this product through our lab to be best in class. And if credit unions want to provide their members value beyond just basic banking, then Ditch is the place to do so.
That's awesome. That's awesome. Listen, I look forward to meeting you in person at VentureTech. It's going to be really exciting. I hope everybody can join us there.
Cool. Awesome. Thank you.
It's
And nice
good.
to meet you.
Kris, thank you very much for joining us on the podcast today. We're excited about your presentation and your pitch coming up at VentureTech. Why don't you tell us a little bit about yourself and about Loanterra?
Yeah, thanks for having me. Um, well, we are Loanterra. Um, we are a group of parents who want to be able to look our children in the eye when climate change is defining their lives and their lives' potentials, and we want to be able to say that we did our best. And so, how we are doing that is we're doing that by making business a positive force in the world for societal benefit and not just for profit. And so how we do that is we're making green lending. Um, we're doing it better, faster, and cheaper than the current lenders in the space.
What
And that's
type of
why,
services? No, go ahead.
well, and so that's why we also we work with credit unions because we value credit unions. Our values and credit union values align really well in terms of growing community ties and resilience.
What type of loans do you help credit unions make?
So right now we're making solar, battery, EV chargers, HVAC, water heaters, insulation,
Okay.
windows, anything that's gonna make your home more green, but also save the homeowner money, and that helps with loan repayment.
What do you think the benefits are to the financial institutions that you work with?
Benefits. These are typically excellent loans. Um, Very low charge-off rates, and they yield quite well. So to credit unions, we're bringing increased revenues based on other assets that they might be investing in and loaning in.
Okay. Are there particular challenges that you've had to overcome to bring your service to the marketplace?
Well, we're a startup. We are just coming out of stealth mode. And so this is kind of like our coming out party. We're here and we're looking to sign on as many credit unions as we can because we think that this is going to change the market, like the green installation market, advance that transition to a more green grid, and also help out credit unions along the way. We're really excited everyone who we talk to about this, and we'll give the pitch later, but
Mm-hmm.
everyone we talk to about this is like, how do I sign up? This sounds amazing. So,
That's great. That's great. And it definitely can give an opportunity for credit unions to reach into a space they may not be serving well today, right?
Exactly.
These type of loans today. So tell me, if you were going to give advice to a aspiring entrepreneur, what advice would you give them?
Ooh. Well, I used to be a teacher, and so I would say something along the lines of what I used to tell all my students, which is find what you're good at, find what you're passionate about, and find what makes money, and do the thing that's at the nexus of those three. And if you do that well, you will be successful. You will solve problems for the world. That's what I'd say.
That's awesome. That's awesome. As a part of the selection committee, I saw you guys there. I'm super excited to see you on stage at VentureTech. We're excited. We'll see you in Frisco, Texas. Okay.
We are looking forward to it. It's going to be great. We're really excited. Thank you.
Jacob, thank you very much for joining us. We're super excited to have you on this preview show. Why don't you tell us a little bit about your company and about you and your background?
Yeah, absolutely. Thank you very much for having me. So I'm Jacob Bennett. I'm one of the two co-founders of Crux Analytics. My co-founder is also my brother, Nathan Bennett. So we've known each other for quite a while. Crux was really started with a simple idea in mind, and it had really been driven by the fact that I had run a small business for 7 years prior, worked with a lot of other small business owners, and had really seen firsthand all of the difficulties that come with running a small business, but in particular, sort of often what I would describe as the strained relationship that small businesses have with financial institutions. And so that was really the diving board for us. And we jumped in the deep end and sort of examined how this relationship looks today and how it could look better in the future. And what we really found is there is a gap that exists between small businesses and community financial institutions. And that relationship hasn't changed substantially for the last 100+ years. It really isn't working so well for either side of the equation at this point. And so that's what we're targeting, is really how can we help community-based financial institutions really be proactive in driving those relationships with small business members, to ultimately bring the most value possible back to the institution, but also drive value back to that small business. That's really where we're focused.
Was there something that occurred that inspired you to take on this challenge? Because this is a challenge that's been around for a while, right? Was there something that inspired you to take this on?
Yeah, that's a great question. It's something that I had kind of kicking around my brain. I'm one of those people who, has notebooks and text messages to myself with half-baked ideas. And so I'd sort of found this interplay and this dynamic quite interesting for a while. And then the thing that really sent me down the rabbit hole was COVID and lockdown. And, everyone was reading about the disproportionate effect it was having on small businesses. And I think it reaffirmed for me, and I think for a lot of people, again, just the role that small businesses play in our lives, in our economy. I just thought there must be something better. And obviously it was personal to me. And so that's what really got the wheels turning, and started doing research and talking to people and learning about this industry. Here we are today, several years later.
That's awesome. Were there particular challenges you had to overcome building the service and building your company?
Absolutely. Listen, I think I don't have to tell anyone who would be watching this podcast that this industry is difficult in many ways. It is sometimes its own worst enemy, in that, I think credit unions, community financial institutions want to be the best partners they can possibly be. But at the end of the day, they always have to consider kind of what the risk looks like in being that partner. And I think when we're talking about credit unions specifically, frankly, from our perspective, they're a little bit late to the party when it comes to small business services and business banking in general. And I think a lot of that has been driven by the risk that is associated with it. So that's absolutely something that we're targeting, is how can we bring transparency to that risk. And so really, I think the positive in what I'm saying here is this year, it seems to be the year that many more credit unions started talking about standing up business services. We've had a lot of conversations with credit unions who are launching those services now or by the end of this year. And so I think the industry knows that to best serve their communities, you do have to be talking about small business. And so it's both a challenge and a major opportunity for us and for the industry as a whole.
Very true. Venture tech is going to have a mix of credit unions and venture capitalists there, right?
Yep.
When you're done with your presentation, what's the message you hope they walk away with?
I think the message they walk away with, I hope the message they walk away with is that banking small businesses isn't just a major opportunity. It is really a necessity for them to be considering if they are not already considering it. And within that realm, we can give them a view that no one else today can give them to, like I said, control the risk associated with banking small businesses, but also maximize the reward on both sides of the equation.
We have a lot of, in addition to credit unions and VCs, we have a lot of entrepreneurs who watch the pod. What advice would you give to a fellow entrepreneur who's aspiring to get into this market?
You need to have a lot of patience. You need to have a lot of perseverance. I think this isn't my first rodeo, so to speak. It is within this industry, but I think the general theme that I've seen across the board, across industries, is really to have that determination, understand when you're onto something good, listen to the right people, be willing to push back where necessary, and have the conviction to sort of see it to the finish line.
That's awesome. That's awesome. Jacob, I can't wait to meet you in person at VentureTech. I'm excited for you guys and looking forward to seeing what you guys offer.
Thank you so much. I appreciate it, Kris.
Pedro, thank you very much for joining us. We're excited to have you on this episode. Tell us a little bit about yourself and your company.
Well, I'm thrilled to be here. Thanks for having me. About myself, so I'm originally from Brazil. I moved to the States when I was 15 years old, and my story is similar to many immigrants into the U.S. My mother was in debt in our home country, Brazil, and she came to live the American dream. She cleaned houses, did all sorts of odd end things to provide a better education for me and my little brother. We landed in a Silicon Valley without knowing what the heck the Silicon Valley was. I was fortunate enough to play sport in high school and went to college at the University of California, Davis, where I studied economics and international relations. I then learned about the world of finance there. I said, hey, I'm going to put my own oxygen mask on. So I went to work at Morgan Stanley in the wealth management side and quickly realized it was far from my own reality, having grown up middle, lower income in Brazil, lived as an immigrant in California. I said, you know what? It was intellectually cool there, but I think I need to do something that's more mission driven. So I transitioned first at Chase on the retail, where I was like close to everyday people, but I was just a number in a very large organization. I then bumped into a startup that did small dollar lending to underserved consumers in the US to help them establish credit. I got incredible journey there, Kris, from Series C all the way to an IPO. So as a young adult, I learned a lot. The company grew from 250 people to 3,000 people, from doing 4,000 loans a month to 40,000 loans a month. I then wanted to continue to invest in myself. So I went back to business school at the University of California, Berkeley, where I started the company alongside with my co-founder, Jessica. And it was really about how could I take the learnings of having worked on large brands like Chase, Morgan Stanley, in a startup that grew and ended up going public, helping underserved consumers access financial service products. But how could I get an idea out of the paper and think about redesigning the way people interact and engage with money beyond responsible lending? What other products are there for the financial health and well-being of individuals? So that has been the past 5 years of building Flourish, and we have never looked back since.
Was there something specific that inspired you to create Flourish?
Sure. I mean, my own trajectory is very connected with the trajectory of starting the company. So if you imagine as a 15-year-old to a new country trying to go open a bank account, my mom living paycheck to paycheck, having to rely on payday lending. At the end of the month, it was always tough to make ends meet. Investing savings was something aspiration that neither of us knew how to do. With me delivering newspaper, her cleaning houses. We lived in a 3-bedroom with 13 other people when we first moved here. So that was quite tough. But I've been able to break out of that cycle and have since then wanting to create products that could help individuals get ahead, plan for the future, spend better, manage their finances, feel less stressed. Because even people that are good at managing money, they still feel money stressed. They don't know if they're doing good enough. But with people that have very little, living paycheck to paycheck, it's extra hard. It's a survival mindset. So I had many of those stories growing up, seeing my parents in debt, seeing my mom rely on payday lending. I didn't want that for me. I didn't want that for the people around me. And I wanted to be part of the people creating products for that community.
Excellent. So you had an exit in your first company, and then you went to business school, and that's where you started Flourish.
I wasn't the founder of the first company. I was an early employee.
Sure.
I didn't retire then. It helped me with my down payment for my house and pay for business school. I joined them. It was late, like growth stage, but still in the earlier days.
Awesome. Tell me a little bit about, did you have to overcome any challenges to build your company or to build your service?
Oh man, I feel like that's every day. That's the life of entrepreneurship. From pitching over 100 investors to raise our first seed round, to knocking on the doors of philanthropics, VCs, and not knowing the rules of the game, to making mistakes on hiring of people that didn't necessarily have the culture or fit of a startup, to figuring out what's the right go-to-market. Like today we operate in 5 countries: US, Brazil, Colombia, and Mexico. And you think it's cool for early stage, but in the early days, it's hard to being able to go in multiple countries and being able to adapt to the banking infrastructure of different places and people's behavior. So I guess it's filled of mistakes and challenges along the way, but as an entrepreneur, you really got to frame those as learnings, and the next at bat, you become better at it. So it's really a mindset of seeing those hurdles from my personal journey of coming for little, having to start over in a new country, to making mistakes in the early days of creating something new and innovating. I think that's just part of the journey.
It is indeed. I can't imagine doing a startup in multiple countries. That really has got to be very difficult. So go ahead.
It has its advantages, right? Like you have talent across, you have learnings that can come across, but at the same time, it's a context changing at times. But if you take it's kind of like I said, my journey is interconnected with the company that I'm building. So I grew up in Brazil until I was 15. I came to the US, had this great career in the Silicon Valley, and I wanted to help people from my community. So what that meant was, first, the immigrant community in the US, or people that were starting out. But then if you look more broadly, money management is an issue across the board. So how could I make an impact? So I thought global. Maybe I could have probably better stacked my go-to-market a little bit better for resource allocation. But hey, you live and learn.
So it certainly sounds like your service benefits consumers. How does it benefit financial institutions?
Definitely. We impact key metrics for the financial institutions, may that be credit union, fintech, or banks. Think about, we have 3 very strong use cases. One is around primacy and principality of the account. So think about someone having a checking account, but using that account to receive the direct deposit, using that account to pay bills. So having that as a primary institution, having more money and additional deposits. So that's one use case. The second use case is around interchange fees and card activation. So getting people to use the card more often, sign up for Apple Pay, pay their bills on time. So driving revenue on top of a credit card product. And then the third component is around reducing default rates. So think about getting people to pay their auto loan on time consecutively, and ideally from that account that's in the institution. So a lot of credit unions struggle with having a auto loan portfolio, but doesn't have the primacy of its member. So we design a solution that can impact those three things: reduce default rate, increase deposit, and drive share of wallet or primacy of the account.
It's awesome. So there's going to be fintechs, credit unions, and VC investors at VentureTech. What's the message you want them to walk away with after hearing your pitch?
Yeah, I mean, look, the business is really important, but the humans behind the business being built, it's even more important. And I believe if you want to drive innovation, one, collaboration is important, but collaboration from different perspective. And I believe if we care, if we care about the financial health and financial well-being of Americans and individuals, you need new ways of solving problems, and you need to bring people together. And the message that I want to pass is that we have this new way. It's diverse, it's working, but we need collaboration to break into a very large community, which is the credit union, that has mission aligned, but not always is an early adopter of technology. So we need people to take risks in order to drive new solutions and financial well-being of individuals.
That is well said. That is well said. So thank you very much for joining us. I can't wait to meet you in person at VentureTech. Travel safe. We will see you there.
I am really excited. Thanks for the time here.
Todd, thank you very much for joining us on the podcast today. Tell us a little bit about yourself and your company, Careful.
Sure. Great to be here. Careful is a technology that's provided to credit unions to protect their members from the $28 billion in elder fraud and senior exploitation. 2/3 of deposits in the U.S. are held by older adults, and credit unions members tend to be older just by definition. Just to step back a little about me, I spent the last 20 years building new products and services for banks and credit unions and wealth advisors. I eventually sold my product development company, but I realized at one point I was always building for kids. Always taking the newest technologies and making cool stuff for Gen Z and younger. And yet all of the money is still with our parents, and all of the money is still with retirement age and older adults. And none of the cool technology was being pointed there. And so, when you speak to credit unions, the idea that they don't have something to really protect folks from what happens with elder fraud was just too much of a gap. So started Careful 5 years ago, and we're off to the races.
That's awesome. What was your inspiration in finding a product to serve older members?
Yeah, I think when you really get into the idea behind community financial institutions in general, they're built on relationships. And they're built on taking care of members and knowing these families. They have a lot of older adults. It's not a bad thing. It's because they grew up with these families. And the more time I spent building for community institutions, and frankly, on the wealth side as well, I don't know if I've seen a more unmet need in financial services today than both an older adult who's getting a fake UPS text every day telling them they have a package. And then on top of that, there are 45 million people in the U.S. who are what we call financial caregivers. That's next generation people who have been pulled into their parents' money. And if you want to see someone unhappy, this is someone with job, a kids, and now they're impersonating their parents by logging in as them, trying to keep the train on the tracks, looking for fraud, no idea what to do there, right? That is a huge amount of work for somebody. So I was really drawn to that. And then when I personally experienced it, it was time to build something that could do the job.
Are you currently serving credit unions?
Yes.
And working with credit unions and community banks?
We are. We work with over 40 institutions. We have some really large partnerships like Mass Mutual, and we're in the Nationwide app today. At the same time, we, Cetera on the broker-dealer side, although our DNA is community institutions, right? $1 billion, $500 million, $2 billion. We love 1 to 10. It really doesn't matter. We love community institutions because they care about their members. They, again, they know these families and are looking for ways to really serve them. All community institutions want to get younger, and yet the way they've been getting younger, or trying to, over the last few years, is to leave the member that they have and go try and invent and stand up things for kids. And we just felt that the way to get younger was to take care of the member you have and have them bring their kids in. So what we're seeing with community institutions is this: by protecting older adults, we create what we call a whole family relationship. The kids feel like this is the right place for them too. This is the place where everyone's family. This is the center of a family financial relationship. So, credit unions have been a really great fit for that, for I think obvious reasons.
What are the typical kind of results you see when you're working with a credit union?
Yeah, so we want to protect older adults from elder fraud, scams, behavior change, detect Alzheimer's, dementia. It's not just fraud; it's mistakes people make themselves, and we're incredibly impactful when we do that. But what we really want, in parallel to that, is people to consolidate deposits with the credit union, right? And we see the person who's given careful by a financial institution increases their deposits by 20%. We see a 10% reduction in churn because nobody cancels careful. It's a very sticky service, and so those are the kind of near-term impact that we want to drive for a credit union. We want to do the right thing and protect against fraud. But the benefit to the institution is core to the right now strategy, which is we want more deposits. We want them to be stickier.
How long did it take you to develop your solution?
Yeah, so we've been building Careful for about 5 years now. Been out in the market for 4. It's an AI-based solution, and that means that it's always getting better. So it's I would say it's taken us years. We're going to be at this for a very long time. There is an entire industry that has stood up since COVID. It's up 80%. That is just targeted at older members. We are in a different world than we were in 2000, 2001. There is it's not the fake email from Nigeria anymore. This is really kind of sinister stuff like romance scams and things, what's called pig butchering, when you get someone ready to give you money, charity scams, all kinds of things. And so our job is to stay on top of the latest scams targeting seniors and next generation. And that is a living problem, right? Now our technology has gotten smarter, and we have built the industry's only engine that can spot those things. The big kind of insight behind it is everybody's focused on identity theft, everybody. And we do that too. However, with older adults, identity is not the problem. It is always them giving money to a fake girlfriend in Poland. It is always them, believing and trusting in maybe the wrong person. It's always them making strange recurring deduction to charity. It's always them. And so it's behavior change you have to look for. It's how they behave and when and how that individual is now moving money in ways that is a pattern that we can spot early, before the family walks into a credit union and says, how could you let this happen? So it's about early detection, and that's where I think we spent a few years building something that really is strong at finding things when they're a small problem before it becomes a really huge family problem and a lot of risk to the institution.
That sounds amazing. And I can't wait to see you guys pitch on stage at VentureTech. Cool. We have a lot of aspiring entrepreneurs as well who watch this series. What advice would you have as a successful entrepreneur who's now, working on your next success? What advice would you have for aspiring entrepreneurs, especially those who want to get into this marketplace?
Lots more than we have time for, but just a couple. I have unsexy advice. So here it is. Particularly with this marketplace, I would say if you are solving a real problem. Meaning one that that the market can articulate. Meaning I don't have to convince you this is a good thing. This is a real human pain point. So when you speak to someone about their parents or about elder fraud, they can always cut you off and tell you someone they know that's been a victim of something, right? And those are good signals. So finding the right problem to start to work on is always good practice. But after that, because that's the easy stuff, I think the hard stuff, particularly in this market, is unfortunately, it is persistence, and the that really means like be ready for the nature of these institutions, the sales cycle, the resources they have, the way that they can allocate funds and attention. It's always going to take 2 and 3 times longer than you hope it will take. And if you're defining success for yourself, for your investors by speed and how fast, which is what the market always tells you success looks like, that's not how success actually works with community institutions, right? So know your market, right? Have a steel stomach and you can build a thing, but you're going to have to go at the pace of the market. And then that speed will come. But if it's, hey, I introduced a thing and it's so great on its own, it's going to be picked up overnight. I haven't seen that work yet in this market. And so I would say entrepreneurs should be ready for that and and have the fortitude, I would say, to have a longer time horizon than is in their sales deck, that is in their VC deck, because it's not about how much, it's not always about raising money, right? At the end of the day, you got to go build the thing. So
that's right.
Yeah,
that's right.
I think people focus on what you tell investors. That doesn't matter. What matters is what you're building, and are you building it, and is it growing? So so I think being persistent is probably where the not what anybody wants to hear, but unfortunately, it is the advice I would give.
No, I very much feel the power of that statement. That is very, very true. So listen, I thank you very much for joining us. I'm excited to see you on stage at VentureTech.
Awesome.
Looking forward to meeting you in person. Thank you very much for joining us today.
You got it, Kris. Happy to be here and looking forward to VentureTech.
Clarence, thank you so much for meeting us today. We're excited that you're going to be presenting at VentureTech. Why don't you tell us a little bit about your company and yourself?
Great. I'm Clarence. I'm the CEO and co-founder of Coverbase. What we're doing is automating third-party vendor assessments for banks and credit unions using AI. Third-party risk assessments look like hundreds of questions of questionnaires and documents and SOC 2s and policies that I'm sure every bank is familiar with. It causes a ton of pain from the bank side. It also causes a ton of pain from the vendor and supplier side. And we think that not a lot of this has to be done by people. We automate about 90% of the process so that people can focus their time on the more strategic, important things that are really hard to automate, like making decisions about how worthwhile is it taking on the risk of working with a vendor if they're bringing you this amount of business opportunities and acceleration to your bank.
What a tremendous opportunity for artificial intelligence.
Yes, there's so much that artificial intelligence can do for us that just wasn't possible even a couple of years ago. What we're finding is that the unstructured information that goes into the security and compliance and legal review processes of taking on a new vendor and supplier can really be accelerated so that people that really don't want to be looking through hundreds of pages of documents all day in their day jobs can focus on the things that really matter. Third parties come with real risk, real security problems. More than 50% of breaches come from third parties and somewhere along the attack chain. And we think that questionnaires are just not the way that people should be spending their time to uncover what the most likely causes of breaches are.
What inspired you to create this product?
In my last life, I was selling a product to banks and credit unions. I've gone through more than 500 vendor review processes. It's its own kind of torture, I assure you. And it's not the most fun thing to do. I saw that there were a ton of products and services to help vendors answer questionnaires faster and more automatically. But that just didn't seem like the root of the problem. The root of the problem is that people were still sending long questionnaires to be filled in and lots of documents being exchanged, but it didn't seem to be solving a real security problem. It didn't seem to solve the root of the problem. So what Coverbase is trying to do is to, first of all, automate as much as possible, free up time of the teams to focus on the important things, and then we can actually start solving third-party risk, which is different from third-party risk management.
What were some of the challenges you had to overcome developing your product?
A lot of it is the challenges using artificial intelligence, generative AI, large language models to solve problems in risk and security. Anyone who's tried using OpenAI, Anthropic, online LLMs to solve problems like these will immediately come to the realization that you can't just use these out of the box to solve problems in highly critical use cases because they're meant to be chatbots. They're not meant to be auditable, reproducible, documentable results. And a lot of what we spend our time on is to make these reliable and to make it such that any person sending documents and questionnaires into this system doesn't have to second guess every single thing that's coming out of the system. And that just required a ton of re-engineering everything that the systems were doing so that we can have the real benefits come out of a system like that.
Did you build your own model as a part of that process?
We built and fine-tuned a lot of models. We, of course, leverage a lot of open-sourced foundation models, but what we found was that all these foundation models were not really built with risk compliance security documents in mind. They were not trained using these documents because these documents are not available publicly online. And therefore, we needed to do a ton of fine-tuning and training of these models so that they could do their task a lot more effectively.
Are you working with banks and credit unions today, or is this a new domain for you?
We are a fairly new company, period. We are a company that's about a year old, but we have about 15 banks and credit unions on us today, including some of the larger ones on the list. So a lot of them are relying on us because of the main value proposition that they don't want to be building huge teams of people doing low value work, and they can elevate their folks and employees to work on higher value, more strategic things that improve the general posture and compliance of the bank.
So VentureTech is going to be filled with credit union executives, venture capital, other QSO folks from throughout the credit union industry. What's the key message you hope they walk away with about your company?
We think there's this huge grassroots movements of credit unions, banks moving away from single sources of technology from their cores and starting to use more dedicated technologies that help to accelerate their business and move faster. Gone are the days where you're buying hundreds of add-ons and products from the large cores that I won't name that never seem to live up to promises. There are so many vendors out there that can accelerate your business. It can open up new opportunities. Don't let vendor management be the thing that's holding you back, and let it be the accelerant to your business that helps you to evolve and stay relevant and win in the market of fintechs.
What great advice for credit unions. Clarence, we are so excited that you're going to be at VentureTech. I'm looking forward to meeting you. Best of luck, safe travels. We will see you there.
Thank you, Kris. See you soon.
Hello, Joseph. Thank you very much for joining us on this special episode. How are you?
I'm wonderful. Yourself?
Better than I deserve. Thank you. So we're excited to have Nichols presenting at VentureTech this year. Why don't you tell me a little bit about the company and a little bit about your background?
Sure. Nichols is a QSO. We only serve credit unions. We became a QSO in July of 2022 when Reseda Group, MSU FCU, and Community Choice invested in our seed round. We help credit unions in different areas of their credit card businesses. And the flagship product that we're going to be talking about at VentureTech is CardFit, which is NerdWallet for credit union credit cards.
That's awesome. Tell me a little bit about the inspiration for this new service.
Sure. Half of the country in the US revolves on their credit cards, meaning they sometimes carry a balance from 1 month to the next. And for that half of the population, per the CFPB data, on average, they earn about $42 in rewards on their cards and get charged $456 in interest and fees. They are on the wrong credit card. 25% of credit card applications come through card comparison sites like NerdWallet, Bankrate, Wallet Hub. And those sites basically work for the big banks, making rewards look better than they are. And so we thought that there should be a card comparison site that works for the half of the country that sometimes carries a balance and shows them that lowering their interest rate far outweighs the rewards that they may be giving up. And so what we also then saw is that a product like that actually works very well with credit union credit cards, because while credit union cards may not necessarily win on rewards, they crush the big banks when it comes to rate.
So is the idea that I, as a consumer, I'm operating on the website and I enter my information, it directs me to MSU FCU's credit card? Is that the idea?
So we run paid digital ads wherever the credit union is looking to grow more membership. And the paid digital ads promote CardFit and target and try to reach the half of the population that sometimes carries a balance. And so when you come in, you can think of it as a NerdWallet experience, but you'll see, based on annual fees, rewards, and interest costs, that if you sometimes carry a balance in a simple dollar for dollar comparison, that actually a lower rate card is going to be better for you. In 99% of the time, that lower rate card ends up being a local credit union card that you may have never heard about or considered.
Oh, that's awesome. What were some of the challenges you had to overcome creating this product?
So we actually started working with credit unions, and I started the company back in 2019, initially in targeting federal student debt and helping credit union members pay off their federal student loans. Who knew that there was going to be a global pandemic, and who knew that in response to the pandemic, the government, for the first time ever, would freeze nearly all federal student loan payments? Great for student borrowers, not good for a startup trying to help with those payments. And the joke was on us, because that initial 6-month payment freeze turned into 9 months, 12 months, 3.5 years later, the freeze finally got taken off. So we had to completely pivot our company from helping credit unions support their members around federal student loan payments to helping credit unions around the areas of credit card debt, which was a complete overhaul of our product. That proved to be a bit of a challenge.
Yeah, I would say. What advice would you have for other entrepreneurs who might be facing sizable challenges with them trying to roll out their new service?
I think you need to listen to your customers and talk to a lot of them to understand and identify trends. It's been very helpful for us to be able to talk with credit unions and get their feedback. And it's sometimes hard to know when to just put your head down and plow the course and when to adjust. But I've had the most success when I've approached it a little bit more like a scientific method and gotten stuff out there and let enough feedback identify trends and commonalities that then helped us guide us to how we need to adapt our product. It's not to say that they're going to give you the answer, but they're going to identify what's working and not working and give you the information you need to come up with a better answer.
It's a great point. Great point. Listen to your customer. What do you hope to accomplish at VentureTech this year? What's the message that you hope those credit unions and potential venture capital investors walk away knowing about Nichols?
So credit unions have had tremendous success for decades by working together and allowing the collective of their efforts to compete with the country's biggest banks. And that's in ATMs and armored trucks and a lot of different areas. But we haven't seen credit unions collectively work together around marketing, oftentimes because the credit unions they're used to working with are the ones geographically close to them or in the similar state leagues, et cetera. And so we think there's actually an amazing opportunity for credit unions to start working with credit unions across the country that they're not actually competing with and collectively build a credit card comparison site that can actually compete with NerdWallet. And so what I hope credit unions take away from my pitch and being down there is that, look, each one of them is never going to be able to compete head to head with Chase or Bank of America, et cetera. But if they can take the same cooperative approach that they've taken in a lot of different areas of the banking space and start applying that to digital marketing, collectively, they can actually provide digital tools for the country that can be more helpful for users, give them better financial guidance, and can help them collectively acquire millions of net new members in the process. And that's what we're trying to do with CardFit.
What a great message. What a great message, truly being. Listen, Joseph, I love it. I can't wait to see you guys on stage at VentureTech. Excited to see you there. I know the credit unions will be listening and really interested in what you have to say. So thank you very much for joining us on this preview.
Thank you.
Daniel, thank you very much for joining us on the podcast today. We are so excited to see you guys at VentureTech this year. Why don't we start by having you give us a little bit of background about your firm and tell us about your background as well.
For sure. Thanks again, Kris, for the invitation. Kris with a K, I'll remember that. Yeah, just on a high level, basically, Cyrus AI, we build complex workflow agents. And our goal really here is to empower credit unions and banks to recover millions of dollars every year. by reducing the workflow costs and increasing output. So that's kind of like what we do. And then how we do it is through our, as I mentioned, AI workflow agents. And we automate many of those complex back office workflows. So think about it this way: you have human beings and team members working 9 to 5 on their job, in credit unions. Now, some of those jobs are high impact and they're very exciting, but then there's these back office job, which is very mundane, and the humans aren't happy with it. It's a lot of back and forth data entry stuff. And so, our kind of vision is we can use AI to automate those tasks, saving banks millions of dollars and credit unions millions of dollars every year, and at the same time allow your human team members to really focus on those high impact issues, right? Talking to customers, scaling, revenue growth, like all the things that matter. So that's sort of in a nutshell is what we do.
Very cool. What was your inspiration for this product?
Yeah, great question. So I've been I would say in the machine learning enterprise SaaS space for almost like 12 years. So I'm a tech, just for context, I'm a tech founder. I founded a enterprise SaaS company prior to this. And for those who are in the tech space, you may know of a group called Y Combinator, YC. So I was there at 2016 back when Sam Altman was the CEO of YC. So it's a small world, and a lot of inspiration came from that. But really, the goal was, I had this thesis for the past 6-7 years, is that the future of work is humans and intelligent machines coming together. It's not a zero-sum game. It's really coming together to unlock that next wave of productivity. And so that is something I was really passionate about, and I've been doing this, in enterprise for a while. And then the second insight is, the past 15 years of software, if you think about it, was all about helping humans to make better decisions and to perform their job better. So, we built, databases and companies like Fiserv and Salesforce and Slack and Microsoft Teams, but, and they all helped, but ultimately the humans still had to perform the task. I think, Kris, what has shifted is in the past 12 months is the next decade, software is not just enablement, it's execution, meaning software can do many of those tasks and workflows, often the monotonous one, on behalf of the humans. So then the question I leave for everybody here is, what does that word look like, right? How do we prepare credit unions to thrive, not just survive, but really thrive in such an environment? So those were my two kind of theses. And then finally, why credit unions, why the focus on that? It's something we learned early on when we were talking to some of the larger banks. And I guess without giving names, some of the larger banks we spoke to have a budget of 100 to 150 million a year on AI initiatives. And it was called out in a recent sort of conference that I attended by a CEO of a credit union that the gap between the credit unions and banks, especially the larger guys, is getting even wider because they can throw in the R&D, they can throw in the hundreds of millions of dollars to get those efficiency gains. That's and right. So what about everybody else? What about the rest of us? And I feel like we're one of the answers to that, right? Like we're the answer to that sort of question. So I hope that kind of helps That's you awesome. Understand the inspiration of why.
No, that is the perfect analysis of where the community financial industry is today, right? We're struggling to keep up with the very largest providers in the space because of their ability to do R&D. What are some of the particular challenges you've had to overcome in building your company?
This one or prior one? Sorry. Okay.
This one.
All right.
We'll say this one.
Okay. I think like building an enterprise SaaS company is very different than building, let's say, consumer tech or a different, market. And often folks forget about that. So I think I would say that this, because I've been in the enterprise space, one of the key things that's really important is compliance and regulation. Like you gotta operate in a regulated, environment. And having taken those learnings before, so it was less of a challenge for me this time around. I mean, things like SOC 2, things like GLBA, just making sure that, you work within the confines or within the compliance, because that's critical, right? Like you cannot mess around with that in this space, and you have to be very respectful of that. And I often find it's funny, like a lot of vendors don't take it as seriously as they should. So that's one piece. I think the other, I think it's not a challenge, but I would say more of an opportunity is, what really excites me is just listening, It seems common sense, but we're not really, often in a world where there's a lot of common, like people aren't using the basic common sense stuff. We use advanced analytics, but sometimes I would say is that if you want to, win someone's business or work with credit unions, uh, the ability to listen and connect and just understand in an authentic way, like what are your problems? How do we connect? And then can we show you the ROI? Can we deliver you the success? Right? If you build that trust, it'll go a long way. So.
That's excellent. That's excellent. So, Danielle, it's very nice to meet you. We're excited to see you on stage presenting at VentureTech. What do you hope the presentation to VentureTech's credit unions and VCs who are there, what do you hope that helps or brings for your company?
I think it's the message that I'm trying to get out there. This is more for the credit unions, less so for the VCs. Is that they should hold software companies to a higher standard. Like I was talking to a president of a COO, and he asked me a question during the conversation where like, so how much do you folks charge for support and updates? And I was like, wait, you guys pay for support and updates?
Sometimes they do.
Yeah, and they were like, wait, you guys don't charge for that? Because often you find you have incumbents in the space where every time you need to make a meaningful change, it's going to cost you X, Y, and Z. And I find like when you look at high tech companies, that's not sort of sort of like the Silicon Valley model. It's not how we operate. The goal is to provide value. And when you provide value, you will have opportunities to expand and build that meaningful relationship. So I think that's the main thing I want to like convey is that I believe credit unions should hold vendors to a higher standard. Ask us the difficult questions, ask us for data, and then go from there.
Excellent. Excellent. There it is, everybody. Daniel from Saris AI, ready to take the stage at VentureTech. We look forward to seeing you there, my man.
All right. Thanks again. It's a pleasure. Excited to see you all. Bye.
Thank you. Reagan, thank you very much for joining us today. We're super excited to have you on this preview of VentureTech. Why don't you start by telling us a little bit about yourself and your company?
Absolutely. Thanks for having me. So I'm Reagan Bonley, founder, CEO of Nudge. I spent 12 years at JP Morgan Chase. That's where I really started to, learn a lot more about financial wellness. I spent a lot of that time in wealth management. But what I learned along the way is that there's a lot of people out there that need help. I'm a product of two immigrant families. My parents, they had to, make their way through the system in the United States and try and live a modest life. So what I realized is that over time I could help more people by taking the experience that I have and creating technology around that and supporting credit unions. So I want to empower underserved American families to improve their financial well-being so they could have the financial stability and security that my family never have. And I believe it's my duty to solve those problems with my team so we can reduce the financial stress and inequality of millions of people around the country.
That's amazing. What was the inspiration for the creation of Nudge Money?
So I had a lot of powerful experiences as I was helping people achieve their financial goals in my wealth management career. Simple questions and phrasing things in certain ways and helping people realize the next step in their financial journey and then ultimately the big picture. And then I realized, there's millions of Americans out there that just they have some very fundamental challenges and they don't have that person in their corner that's going to guide them through the next big decision. And when more than half of America is living paycheck to paycheck, doesn't have enough money saved for retirement, doesn't have an appropriate emergency fund, made me think back to my own family and friends. And I think we all deserve that little inspiration, that little nudge that, really guides them to that next step. And I saw a big opportunity with credit unions. They want to deliver financial wellness. They just may not have that tools to really put everything together from understanding the data to sending that message that really resonates to that individual to move them forward and to grow the credit union at the same time.
It sounds like it could be a good fit. What were some of the challenges you had to overcome building the service?
Oh, there was a lot. So, of course, in the startup space, we had to learn quite a lot. We spent a lot of time. We thought that the best approach would be go directly to the end user, and learn about their challenges, and then take that to the credit union. And what we realize is that there's just so many different walks of life out there. So as we worked with thousands of different members of credit unions and various different end users, there was a lot of different challenges that we had to address. From helping people retire, it's a very different challenge than building an emergency fund, and then the gap of financial literacy between the two, and the financial instruments that they have, and all their financial resources. So creating a solution that really speaks to the different wealth people in the wealth spectrum, it took some time. And then ultimately bringing that to the credit union and adapting it to their data and adapting it to their needs, and the fact that they want to help members, and then at the same time they operate like a business. So we need to make that very much in sync, so it's adding value to both member and credit union. So it took some time, but after 3 years, I think we've got it right.
What do you think the benefits are specifically for a credit union?
Growth, retention, and member financial wellness. And I think the biggest thing, there's a lot of different ways that you can look at growth and retention. There's, that could be a data thing, that could be a marketing thing, that, there could be a new financial product, retention, a number of different strategies there. I believe we are the only solution that really marries the growth and retention and the member financial wellness, really being member-centric growth. And I think that's one of the biggest missed opportunities in credit unions, is that they all want to drive wellness. Most of them need to grow. But oftentimes what ends up happening is that they analyze the data, they send it over to the marketing teams, and then the marketing teams do their thing. They market products. And that email that's sent out, that engagement, that conversation in the branch ends up being about the initiative of the credit union, and maybe a little bit disconnected from the actual challenges and the financial goals of the member. So if we can put them on the same side of the table and communicate based on the member needs, that's where we see growth and stronger relationships between the credit union and the member.
It sounds like that'd be a great opportunity. You're going to have the opportunity at VentureTech to present to credit unions, VCs, other entrepreneurs. What do you hope people walk away understanding about Nudge Money, or about your mission?
I think it is just that. It's that there, you can achieve growth with financial wellness, and I think that it's still an evolving concept, and we are making that clear, and we aim to make it incredibly clear that, focusing on the member needs, adapting to their behaviors, the way that they think, the way they perceive information, is a direct correlation to growing the credit union and then ultimately the movement. And, Financial Health Network, for instance, has said that you have 5 times higher engagement and conversion in products, when you focus on that financial health. And I think many times people think that, okay, well, financial wellness means financial literacy, like a separate way to engage in blogs, or it means a budgeting tool, or it means, a vendor that comes and, provides one-on-one consultation. But, oftentimes when I talk to credit unions, they struggle with saying, okay, well, those tools only have 1, 2, 3% engagement.
Right.
Well, why not make financial wellness and literacy a core part of the way that you communicate across all of your channels? And, that's where we're changing the game, is that, it's not just a separate tool and, have your marketing team try and go push 5% of your members over to this app. It's okay, but let's make that a core part of the way that we operate and communicate with all of our members.
Very cool. Very cool. I can't wait to see you in Texas. I think it's going to be a great presentation. Looking forward to meeting you in person. Thank you very much for joining us. We will see you there.
Thanks for having me. Looking forward to seeing you in person.
This podcast is sponsored by Constellation. We're empowering community financial institutions with innovative digital solutions, powered by Fintech, driven by your roadmap. Join us as we navigate the future of digital banking together. For more information on how we can be your partner for digital transformation, visit www.constellation.coop.
Thanks to all the fintechs that participated in this preview. We are pulling for you at VentureTech. We're excited to meet you there. If you're interested in going to VentureTech, you can go to myventuretech.com to register, and we will see you in Texas. Thank you very much for watching this episode. If you enjoyed it, please like and subscribe on your platform of choice. We will see you next time.